the broadcasts. Okay, I think we are live everywhere. Hello, everyone, and welcome to another edition of Merrill's Monday Morning Market Madness, where we take a look at what's going on, what is the latest and greatest in the Phoenix housing market, what some of the stats are, what some of the trends are, and hopefully keeping you more informed as a a homeowner or a potential buyer or a renter, just letting you know what's going on. And I actually blew my own mind with today's numbers, so I'm really excited to share what I found with you today. I am going to start, as always, by taking a look at our month supply of inventory number, which helps us better understand what the competition level in the market is. So right now in the entire MLS, we have 8,811 active listings. 13,796 of our listings are pending, and 9,166 are sold in the past 30 days, giving us a month supply of inventory of 0.96, which is consistent with where we have been over the last several months, sitting just slightly below 1 month supply of inventory, which continues to mean that we are in a significant seller's market, extreme competition, multiple offers, rapidly rising home values. I think we've seen something about like a 17% increase year to date on average in terms of home prices. So home values are skyrocketing, and that is mainly because of extremely low inventory, very few homes available for sale compared to the number of buyers who are currently buying. The interesting thing about this year, though, is that we're just a few weeks away from a presidential election, and everyone, of course, as you know from social media, is getting all fired up about that. And in years past, we have seen a little bit of a slowdown before the election, and we're not really seeing that at all this year, which means, heck, after the election, we might see it pick up even more. I mean, the market is just bananas right now. But what I wanted to look at today is a couple of things, and the main thing that I'm going to start with is average rental prices. Now, I didn't want to just look at everything, condos and manufactured homes and humongous mansions, so I tried to look at like your typical home. I'm looking at all of Maricopa and Pinal County single family homes with something like a three to four bedroom, 2 to 3 bathroom, no bigger than 3,000 square feet, standard size lot, 2-car garage. I know not all homes have that, but I'm trying to just look at like your sort of median home, right? And the average rental price for that median home in Maricopa and Pinal County in the month of September this year, $1,942 a month, almost $2,000 a month for that average rental price in September of 2020. In 2019, it was just under $1,700 for that same exact criteria. In 2018, $1,570. Anyway, I took it all the way back to 2012, where the average price for that home was $1,206. So what we've seen is a 61% increase in average rental prices in Maricopa and Pinal County for your median home. $1,206 in 2012, all the way up to $1,942 in 2020. Now, I don't know about you, but I don't think most people have seen an increase in their income by 61% since 2012. So that's, kind of the bummer part, is that we're seeing, rent prices, up by an average of, over $600-700 a month. Which obviously equates to thousands, an extra $5,000 a year, let's call it, that people are now paying in rent. But they probably didn't also see a $5,000 increase in income over that time period. Plus, we've got all the other increasing expenses, of course, food prices and lots of other things going up as well, not just housing. So, but here's the thing that really, so that is that part is interesting. where it really got me kind of excited was regarding, investing in real estate. So, I mean, if you're renting right now, like, I would love to be able to help you get into a home. Now is a fantastic time to buy. I have had a lot of people, kind of concerned, well, maybe the market is overinflated. I've done a lot of episodes on this in the past. I'm not going to get on it again, but trust me, we're really not seeing an overinflation. We're not setting ourselves up for another big crash like we had in 08, 09. This time is very, very, very different. And I'm happy to go into those numbers and have a big conversation with you about it if that is something that you're concerned about. But let's just take a look from an investment standpoint as well. Let's just say that in 2012, you were an investor and you bought that same median home. That median home would have cost you approximately $175,000. And you would have put 20% down. And so you financed 140,000 of it. And you would have financed that at somewhere a rate. I just went with median, normal standard rates at that time in 2012. I didn't look at like investment rates, but I'm just trying to kind of compare apples to apples. Rate was about 4.125%. So your principal and interest payment would have been $679 a month, just principal and interest. Which would have left the median rent at that time $1,206. So that would have left you $527 a month in leftover cash flow to pay your taxes, your insurance, your management fees, and hopefully have a little money left over to pay you for owning that investment property. Okay, in 2020, you buy the same median house. Okay, median house price $346,000 for the home. For the same statistics that I use to look at your average rental, I use those same stats to look at your average sales price. So $346,000, you would put 20% down, so you finance $277,000. But now your rate was at 2.875%, giving you a principal and interest payment of $1,148. You rent that home out for $1,942 a month, and that gives you a monthly cash flow of $794 to pay your taxes and insurance and HOA and management fees and all that. So even though home prices have gone up significantly, so have rental prices. So your cash flow situation right now on an investment property is actually better than it would have been if you had bought a property in 2012. Not to mention, of course, everything in 2012 was like a distressed short seller foreclosure, so you probably had to put a lot of money into it as well. A lot of homes out there right now that aren't going to require much rehab that you could buy at that price. So, but here's where it gets really crazy. Imagine if you had bought the property in 2012 and you still owned it, right? So now you bought a property in 2012 with the $175,000 purchase price, and now you're renting it for an average of $1,942 a month, which means that your monthly cash flow is now $1,263 a month to pay your taxes, insurance, HOA, management fees, etc. But you also have gained an average of $236,000 in equity. So you've got over $1,000 a month in cash flow, and you have a massive amount of equity. Now, obviously, we can't turn back the clock and go back and buy an investment property in 2012. I think if we all could, we all would go back and buy as many properties as we can, sell off our children, sell off our kidneys, whatever it takes to buy as many houses as we can, right? We can't go back and do that. But here's what I'm telling you. Now is the better time to invest than it was in 2012. And 10 years from now, we're all going to be saying, dang it, I wish I could go back to 2020 and sell a kidney to buy me some investment properties, especially while rates were at 2.875%. So if you do not own any investment properties and you have a little bit of money set aside where you could be purchasing one, I feel very strongly that now is one of the best times ever to invest in real estate. And I would love the opportunity to talk to you about it, talk about your goals, and see if there's some good opportunities out there for you right now. So I hope you found this information interesting. If you have any questions or you want to know more information about what the market is doing in your area, please hit me up. I'm always more than happy to help, and I hope you all have a great week.